Trends.net. Today is Veterans Day, Friday, the 11th of November. Thank you to all of you who have served. The S&P 500 and the rest of the market had a ginormous week, except for energy and, of course, Bitcoin. Whole different story there. But 15% for the semiconductors, still down 28% year to date. So, take it for what it is. Whether you've been long or short this market this year, if you've been holding on to a position, there's been pain in both directions, and this week the pain certainly came to the longs in the S&P, which was up 6%, the Nasdaq up 8%, close to 9%, let's just call it. And again, semiconductors up 15%. On Thursday morning, I had posted this on Twitter, and again, if you're not following me on Twitter, you're only following me on YouTube, you're missing out a ton of information. I posted this because it looked like we were going to gap up above the declining 5-day moving average, and that's what we have here. And when we did gap up, this is the typical scenario that we see. We see a huge gap, and then the prices rally a bit. They dip below the volume weighted average price, and when they get back above that VWAP, one of the first articles I ever wrote about the VWAP was chase the gap or wait for VWAP. The point is you want to buy there with a stop below the low of the day. Midday, we typically see a shakeout, and this is pretty much what we're seeing so far. That the market will continue higher for the next few days, and here's where we are, based on that chart. If you look at the 15-minute time frame on the left, and that's that gap up with the 5-day moving average rising. And here on the right is what we see on the 5-minute time frame. We gapped up, pulled back below that VWAP, and then the buyers took control. We had two little dips below it that day, and today we closed pretty much near the highs. So buyers remain in control. Let me just space that out. Here's the weekly chart. They may remain in control, I should say, for the near term. On the longer term time frame, we're still in a primary downtrend. We still have a very clear pattern here. These highs, each one is lower than the previous one. These lows are lower lows. So we have a pattern of lower highs and lower lows on the weekly time frame. The good news is I don't make my decisions based on the weekly time frame or even the daily time frame. I'm aware of what we're looking for in the daily time frame. And today we got rid of this data for the 50-day moving average. That means for the first time since back here, the 50-day moving average is actually advanced today. So yesterday the 50-day moving average was 378.19. Today it is 378.18. Oh, so it was yesterday was 18. Today is 378.22. So the 50-day moving average is rising again. We had anticipated that the last couple of weeks. I had sketched out, that we were going to be getting rid of this data. So next week we'll see that continue to rise unless on Friday we don't close above this level. But the point is we came down, tested the volume weighted average price from the previous CPI, and it wasn't smooth sailing in there. But we also tested the neckline of this inverted head and shoulders pattern that we've been talking about, and the buyers regained control. There's nothing easy about the move here the last couple weeks, because basically on Wednesday it looked terrible coming into to the close of the day. And when you get that many people in one direction like we had here, well, then you get a surprise that's, viewed positively for the market. You're going to have this outsized move, and that move is typically going to continue for a while. And I think that's what we're going to see is that, maybe Monday we start to pull back a little bit and then, digest. We're right at the anchored VWAP from the March high. Overhead, we have the 200-day moving average. I think if we maybe pull back a little bit in here, then it seems highly likely that we'll make an assault on that 200-day moving average again, and that will put us up near this trend line as well from the high that we had seen earlier this year, and that is just about in that area, the year-to-date anchored VWAP. So this remains an important level of interest overhead. The ideal scenario is we cool off a bit. It'll be important to keep a volume weighted average price anchored to the CPI. That's this level right here. Just as we saw in the 30-minute time frame, we've had that anchored VWAP to the previous CPI because it elicited a strong emotional response. And that's where you want to put your anchored VWAPs, is where you have a strong emotional response from the market. And then from there, you take it as whatever is most important time frame for you. We're quite extended from that 5-day moving average. Doesn't mean we can't continue to move higher, but as it gets extended like this, the new purchases become riskier. So just keep that in mind, of course. The Nasdaq again up. What did I say? 8.5%. We're right into this potential band of resistance that we've been speaking about. Let me just clear all that out. And here's what we've been talking about is the AVWAP from the August high and the summer low, both coming into this area here. Now, you can see the 50-day moving average is declining in here, and that is going to continue because we're getting rid of this data over here in the 50-day moving average calculation. So actually, it'll begin to flatten out here in about the next 2 weeks. Anyways, that's not as important. We've got the rising 20-day moving average. We've got the rising 5-day moving average. We've broken this little band of prior support, which became resistance. What I'd really like to see is maybe we continue up a little bit, pull back, test this level, maybe shake out a little bit, create a higher low, 5-day moving average catches up to it, and then perhaps, if you don't have long exposure, you get long in here. Don't give into the FOMO and chase this stuff. A lot of garbage stocks have bounced this week. And if you look at them, some of them like, what was that one? APPS, I think I saw. This thing nearly doubled. It was at an all-time low, and then it nearly doubled. It's not because the company is suddenly a good company. It's because the shorts got stuck in here, and it's going to be very difficult for them. Look at the previous history of all these types of companies. I mean, we had the stock go from 15 to 25 before. We had a 60% rally, and then it went down and made new lows. If they don't scare you out, they'll typically wear you out. If you're stuck with some of these stocks and you're getting these big bounces, accept them for what they are. It's just a bounce and a downtrend. If you're trading them, accept them for what they are, a bounce and a downtrend. If they continue to move higher, raise your stop up, but don't fall in love with these things and think that they're going to go back to their previous highs up near 85, 90, $100 per share. That's just the thing of dreams. That's like buying the $2 billion lottery winner with one person bought and how many people lost. The point is trade when the odds are in your favor for the time frame that you're involved in. My time frame, as I always mention, is the swing trade time frame. That's what I focus on each and every day for Alpha Trend subscribers. As I mentioned on Wednesday, I am running a sale for Alpha Trend subscription. It's only good through Sunday. That's it. For $7.99, you get an annual Alpha Trend subscription. That's a value of $999. You get the basic course, which is a $99 value. That's 3.5 hours, I think, of training. And then you get the advanced course, which is a $499 program, 13 hours of training. You get a half-hour one-on-one with me and 1 year full subscription. So, take a look at alphatrends.net. If it's not appropriate for you, then it's not appropriate for you. I'm only here to, provide information for people who feel as though it can help them, not to convince people that it's going to help them. If you're a swing trader, I'm convinced I can help you, but that's up to you. The Russell 2000 is closing in on this level that we've identified previously. That is the anchored VWAP from the COVID low, as well as the declining 200-day moving average. And we've got the volume weighted average price from this peak right here. If we put a volume weighted average price anchored to this high, you can see that's up a little bit higher. But big rally in I called it I think I just called it the Russell 2000. It's obviously the semiconductors, but we're looking like this is going to be a potential area of supply. Where have we come from? Well, just this week we've come from 190 to 220. 30 points, that's a big move. That's 15-16%. Where does it have the potential to go before it's likely to encounter a source of supply which might act as resistance? Right up in this area. So be aware of the risk reward. The Russell 2000, again, this market is just kind of at the top end of this range. It's at the COVID AVWAP and the 200-day moving average. Here's the anchored VWAP off of the all-time high. Maybe we continue to drift up towards that, and then if that were the case, I would think you would want to see it come down like this and then be a buyer over here. The biotech stocks still flirting with that inverted head and shoulders pattern that we've mentioned in this prior, here at the neckline. We've got the anchored VWAP off the all-time high right over here, just overhead. So again, where has it come from in the last couple weeks? 113 to 135. That's 20 points. That's about 18% as well. Maybe we see a pullback first and then get this one going. It is, above a rising 5-day moving average, so you have to give the benefit of the doubt to the buyers. And next week, perhaps we come down and refresh, somewhere, rally up a little bit, come back down, refresh somewhere in this area with that 5-day moving average coming up to meet it. That's certainly a possibility. The energy names. I saw people calling this a double top. That's not what a double top is. This just is an area where we've seen resistance before. There's no signs of a double top yet. Anyways, it's a level that has offered resistance. It did last, or on Tuesday, it backed off, but the buyers are still involved in this. We're back above the rising 5-day moving average. I think it's getting late for the energy names in terms of new purchases, but if you're long them, the trend is still clearly higher. There's your 20-day moving average that it's holding above. So, make the trade your own. Do what's right for you in terms of the time frame. Let's take a look real quick at Bitcoin, just because I had mentioned it last week. It looked like maybe it was setting up to go higher, and then you get this awful news. And here's why you have to be managing risk. We saw in the CPI that news brought in buyers to the equity market. Well, the news for Bitcoin obviously took a lot of people off guard, and this is why you always have stops. We broke down below this prior low. If we look at changes from a daily to a monthly time frame, you can see this market is in real trouble. If we go back and anchor a volume weighted average price all the way back to there, we're below that level from 2017. So, the trend is back to lower in here. And again, if they don't scare you out, they'll wear you out. And just because it looks like we're basing doesn't mean it has to go higher. The surprise came to the downside here. I hope you didn't get caught up in it, or at least not badly if you're one of the people who hold Bitcoin. But anyways, thanks for your time. You have a good weekend, and I'll talk to you next week.